Hi, this is John Coumarianos with Mindful Advisory, bringing you a new edition of Driving Returns. This weekend in the Financial Times of London, Robin Wigglesworth, veteran journalist there, had an interview with Eugene Fama. Fama, of course, is famous for propounding the efficient markets hypothesis at the University of Chicago. He's now 85 years old. He won the Nobel Prize a number of years ago. Interestingly, he shared it with Robert Schiller that year. Schiller is not a proponent of the efficient markets hypothesis. He thinks markets are inefficient and human beings get things wrong all the time and are overcome by emotion frequently. But Fama said in this interview a number of provocative things. First of all, he pulled back a little bit. He said, it's a theory. It doesn't explain reality totally. But then he also defended it more strongly at another point, saying, look, if markets are inefficient, then you should be rich. Uh, there's some sense to that, but also I think I prefer a quote by another behavioral finance professor named Meer Stern, who's said something like, um, "Just because the market is crazy doesn't make you a psychiatrist." So I think that's kind of where I stand on this issue. I think markets get things wrong a lot of the time. I think anyone who's observed markets for the past 20 years, the housing crisis, the great tech bubble of 2000, maybe we're in another one now, hard to know. Um, but anyone who's observed markets for any period of time has to scratch their head sometimes and say, gee, I wonder if the market is getting things right. Uh, but as Stotman says, that doesn't make you a psychiatrist. In other words, it doesn't mean that you can exploit the craziness or the inefficiencies easily. Some people can. Michael Lewis wrote a book called The Big Short about a number of hedge funds who shorted mortgage-backed securities. They certainly knew the market was being inefficient or incorrect about something pretty serious. So it happens sometimes where the market's crazy and you are the psychiatrist and you do get it right. You do exploit the craziness or the inefficiency, but hard to do consistently, I think. So the debate continues on efficient markets. I encourage everyone to read the article. It's the famous Lunch with the FT column, which is a great column. It takes place every weekend. It appears every weekend in the Financial Times. Eugene Fama this week. Good article, good read. And I'll post the link in the notes, of course. Thanks very much for watching. This is John Coumarianos with Mindful Advisory and for Driving Returns. If you have any questions about asset management, financial planning, retirement planning, please don't hesitate to call 201 951 3509. Again, 201 951 3509. And the website is mindfuladvisory.com. Thank you very much.